Hello, good morning, everybody. Um, Nobody is here yet. We're about starting our class. Wait for one or two people to join us, and then we'll start right away. On different aspects of smart money concepts we want to learn. Okay, let's wait for one or two people to join us as we're about starting. It's going to be a very educative time of interaction. We are waiting for our friends. Okay. So you can come online so that we can start. Nobody is online yet. Let's start it on time so that we can learn on time. Please come online if you can hear me. We have started already. Okay. Hello. Just click the link I sent to the Telegram group. You will land there. We are started already. Let's be fast about that. Nobody is on here yet. Um, okay. Okay, one person is with us. Just type okay. Um, mm, Nobody is here yet. If you are online, let's know so that we can start. If you're online, we are waiting for you. If you're online, let's know so that we can start. We are waiting. Okay. Um, if you're online, just join us as we start. Nobody is here yet. Oh, thank you, Mr. Joel. Um, if you can hear me, just type if you can hear me. Just type yes if you can hear me. Thank you, thank you, thank you. We'll wait for one or two people more, and then we'll start right away. Very many are indicated to be here, but we only have one person joining us. Um, okay, thank you, Mr. Joel. Thank you. Just give us some time. Let me go to the Telegram group. I hope you can see my screen. If you can see my screen, just type yes. Um, Let me go to Telegram group again. We have um, okay, just one person has joined us so far. Okay, thank you, Mr. Joel. Okay, we're waiting for one or two people to join us so that we can start the class. Maybe by 8:10. If we wait till 8:10 and nobody joins us, then uh, It's blurry. No problem. I will make it. I've not. Okay. Let me. Can you? I don't want to go to where I want to do before I start, but you will see everything clearly once we start. Okay. You should be able to see my screen clearly now. Sure, you'll be able to see my screen clearly if you can see my screen. Just type yes. It should be very clear now. Okay, it should be very clear now. Um, um, let's wait for one more person, Mr. Joel. Then we'll start right away, and others can join us later. Uh, you will see everything clearly. Don't worry, you will see everything clearly when we start. Okay, we have 4 minutes more to start, and then I will start with you, Mr. Joel. Others will come and join us in 4 minutes' time. We are going to start right away. Um, thank you for coming early. Um, thank you. Okay, I will share my screen in a moment. Just wait. Okay. I will share my what we want to do in a moment, the concept we want to learn. But let me be preparing the ground as other people come, and we'll see what to do. Okay. So I'll type what we want to do. The first one, we'll learn market structure. Market structure. Then the second thing, we'll learn liquidity. Then we'll learn buy side liquidity. Four, and then time permits us, um, we'll learn other block. So it's okay. These 5 concepts, Lee will be able to get this today. Okay. Let me see those of us who have come in. It's only Mr. Joel again. So we have 1 minute more. If you can hear me, just type yes, Mr. Joel. If you can hear me, type yes, and let's move ahead. Type yes if you can hear me. Oh, okay. Oh God, thank you. So, if in just few seconds we'll start, and then we'll continue from there. Thank you. Um, can you see this? If you can see my what I wrote, type yes. I wrote market structure. I wrote liquidity. I wrote buy side liquidity, then sell side liquidity, then order block. Those are the things I wrote. If you can see them clearly, just type yes again, and then we'll move ahead from there. Okay. Now it is time to start. So we are going to start. Mr. Joy, if you can see my screen, you can just type yes. There are 5 aspects of the things we are going to learn. We are going to learn market structure. We are going to learn liquidity. We are going to learn buy side liquidity. We are going to learn sell side liquidity. We are going to learn order block. I'll be able to explain it in a while, so that we can go to practical examples in the next meeting we are going to have. Okay, thank you, Mr. Joel. So let's start. We can't wait further again. So others will come and join us. We can't wait further again. So let us start right away. Okay, sorry, this is my group. Okay, now let's look at the market structure. Good. That was what I taught in my first video, market structure. So let us learn it once again. Okay. Now I will change this for us to make it bigger. Okay, now need to change the color to black. Or let me use blue this time for us to see good. Now let's say market is going up, and then trend line will be better to use. Okay, let me use this one then. When I was practicing, I did something to the line, so to make it okay. Let me pick this. Okay, now let's say market is going up. Precious ẹjọ fún mi few minutes ẹjọ. Then going down, up again, then going down small, then up again. Okay, you will observe. Let me see if you. Oh, okay, thank you. You will observe that. If you observe very well, you observe that this is making higher high, higher low, higher high, higher low, higher high, and you will see that this higher low does not break this higher low, and then this higher high is broken by this. So we say the market is in uptrend. Okay, now if the market goes below this leg here, we say there's break in market structure. Market, can you see? If it breaks this, we say there's break in market structure. So this one is uptrend. This is uptrend. Now, and then we have a break in market structure. So let's go to the downtrend. Okay, I'll use the same thing to save time. So that one is uptrend. Let's now go to downtrend. Okay. Okay. Now let's go to the downtrend. Um, Market goes down and goes up, then goes down again, then goes up, okay, and then we have market goes down. This one is uptrend. You observe that market is making lower low, lower low, lower high, lower low, lower high, lower low. So this one we call it uptrend, downtrend rather. Call this one downtrend. Okay. So that one is downtrend. Now, then if this downtrend ends, there will be change in market structure or break in market structure. So it will be something like this. When you have something like that, then this structure is broken. You say that is break in market structure. Okay. Thank you. That one is breaking market structure. Let me see if people are responding. Okay, nobody. Okay, let me make the group for people to respond. Maybe they are finding it difficult to respond, to join us. Um, okay, let me permit them to send message. Okay, for now, and then let's see what others, the difficulties others are having. Great. So let's go back to what we are doing. So we have done market structure. Now let's go to liquidity. Liquidity. Okay, I have to go to the chart. Let me use this as an example. Liquidity. What is liquidity? Is a point whereby uh, there are orders. What do I mean by orders? Is liquidity is a point where you can take either buy or sell trade, but we have to understand what liquidity is all about. Well, here there's a liquidity here. Liquidity is on. Let me write this again. Let me write it here for us to see where liquidity is hide. Okay, number one. Number one, liquidity is on hold I 2 old low, okay, daily high, daily low, where you can place order, but not directly, but there are techniques we use there, daily low, then a weekly high. This is where orders are hiding, weekly high, then again weekly low, then okay, monthly high, and we have monthly low. Okay, this is the yearly high, yearly low too. Let me write it 7, yearly high, then 8, yearly low. Okay, liquidities hide here, old high, old low, daily high, daily low, weekly high, weekly low, monthly high, monthly low, yearly high, and then yearly low. Good. Okay. So these are places where liquidities are hiding. Great. Now let me now show us from the charts where liquidities are hiding. See, this is an old low. Liquidity is here, old low. Okay. This is old high. Liquidity is also here. This is an old high. There's a liquidity here. This is another old low. There's another liquidity there. Let me move backward. I'm on daily charts anyway. This is old high. There's a liquidity there. Where orders are hiding, that's what we call liquidity. Okay, where you can place your orders. Not directly, there are techniques we use for that. This is um old low, okay, and then and so on. Okay, that is old low. This is old high. Great, old high. So liquidities are hiding in those points I've marked. There's a liquidity here. There's another liquidity here. Okay. Okay. So that is great. Great. My internet is back. Okay. Now those are the points where liquidities are hiding. Okay. Um uh, uh, Mr. Joel, if you are following me, let's just type yes. If you are following me, you can type yes if you are following. Hello, Mr. Joel. If you are following, just type yes so that we can continue. Hello, Mr. Joel. If you are following, just type yes and then we continue. I want to be sure you are following me. Oh, okay. Okay. Thank God that another person is here joining us. Okay, great. So let's move ahead. Good. The next thing we are going to do is to get buy or sell side liquidity. That's what I'm going to explain now. Um, let me go back to our course outline for this morning. Okay, we have explained market structure, we have explained liquidity, then we have buy side liquidity, sell side liquidity. Okay, that is the next thing I'm going to explain now. So let's go and pay attention. Please, I want you to pay attention to what I'm going to explain now. This is another low here. Great. Okay, please just pay attention to what I'm going to explain now. You see, this method is different from support and resistance. It's different from trend line. It is different from all what you know. What you think about whenever you want to place trades. I always what the market makers. That is what they manipulate. Most times, you place a trade, and before you know what happens, your trade market will hit your stop loss, and then before you know what happens, it will go in your direction. All of us, we have gone through that before. We have witnessed that. We will think that forex is not real, and so it's not that. It's because we don't. Hello, hello. Okay, thank you. This is an old law. It is assumed that by retail traders that when market gets here, it will touch this and then go higher. But that is not what the bank traders, the market makers, that is not what they think. Look at what happens here. I have extended this. Market ran through. I said there is a liquidity here. He ran through it, taking all the stop losses here. You see, if somebody places, you observe there is a resistance here, or according to what we learned, resistance, and market gets here. Can you see? Market gets here. Then you would think that market will go up, and then before you see it, all the stop losses here will be cleared. Can you see this candle? This candle remove all the stop losses that people put before they when they put trade for buy here, and then before you know it, market went up. Is that okay? It happens over and over and over and over again. So this place is what we call sell side liquidity, where people will think you are going to go on buy order, and then there is a sell that clears the liquidity here and then moves down to your direction. It happens severally. Now let me go to buy side liquidity. Look at this. Look, this is a typical example. Market hasn't gotten here really. This is one. This is old low, old high. Okay, and then this is another old high. Okay. Now look at this. I want to explain buy side liquidity. Look at this place here. This is a resistance. This is a resistance, and you know where it is assumed that we have been taught by retail traders that when market hits a resistance, it will go down, because they say there's a roof there that markets will bounce off from the roof. So that is the idea the market makers, the bank traders, that is the idea they manipulate on, and then before you know what is happening, um, that is the idea they manipulate on. Okay, before you know what is happening, see, market clears everybody here, all the stop losses of those who put sell here at this point. market clears the liquidity here, and before you know it, it goes down. I hope you are getting me. It's a trick that the bank uses to trick us to clear our stop losses, and unknown to us, that is how we lose most of the time. It's not that most of us don't know how to trade. We go in the direction of what we are taught, and before you know it, market goes against us and then goes back to our direction. So this point here, is called that one is buy side liquidity. Why um, this one is called, let me see, use the same thing. This one is called sell side liquidity. I've said it again. Liquidities are where others are hiding, to unknown to us. So this is buy side liquidity, and this is sell side liquidity, where banks manipulate our trades, and then they take up our stop losses, and then we move forward. I'm on a trade with this on this. Okay, I'm on a trade on this. This is why I went sell on this pair. You see, markets clear all the stop losses here and clear these people too, then return back to where it cleared it, and is going down. This place is going down. So there are different things you have to learn from that. So I've been able to explain buy side liquidity and sell side liquidity. Let me hear our comments. If you understand what I've explained so far, you can type yes. If you understand what I've explained so far, you can type yes. Type yes if you understand, before I go to another aspect of what we are going to learn. It just for an hour, so we still have 28 minutes more. So if you understand what we have learned so far, you can type yes. You can type yes. I'm waiting for our comments. I want to go to another concept we have to learn. It will take time to learn this thing, but that is what they do uh, to clear all our trays and then move in our initial direction. So I'm waiting for our comments. Okay, thank you. Thank you. I'm waiting for our comments. If you understand what we have learned so far, you can type yes. Yes. There is one or two more aspects. Yes, thank you, Mr. Joel. Thank you. Thank you. I'm waiting for others to comment. Comment if you understand what we have learned so far. I'm waiting for others to comment. Okay, thank you, Mr. Kennedy. Thank you. Thank you. Um, then Mr. Amuri, thank you so much. Three of us are online. Wait, maybe other people are online, but they are not typing. Okay, no, thank you, Mr. Kennedy. Thank you. It's just a concept that bank uses to trap us and to clear all our stop losses and then go in our direction. Now, let's go to another concept. I've been trying to uh, explain all these concepts in a simple format way. You may get all these concepts online. People can use 1 hour to explain it, wasting your time without really showing you what they are doing, really. And let's go to another concept. We want to learn. I want to clear this my drawing. Let me clear my drawing. Okay, so that okay. Let me clear all of them. Okay, good. Okay. The next thing I want us to learn, let me write it here. Um, so we are learning what I call imbalance. Okay. Now, how many of us understood, we've heard about imbalance before? If you understood imbalance, please, you can let me hear. Just type what you know by imbalance. You can type what you know by imbalance if you understand imbalance before I explain it. So I'll be waiting for our response. Just type what you know by imbalance, and then we'll go from there. Okay. The imbalance. If you understand, if you have heard about imbalance and you understand, or if you have heard about imbalance before, you can type it. Let me see. Before I go to explain what an imbalance is. Okay. So I'm waiting. Waiting. Or if you have not heard about it, just type no. If you have heard about it, type yes. If you have not heard about it, type no, and then we'll move from there. Imbalance. You need imbalance to make a trade whenever you are trading on smart money concepts. Um, Imbalance is we who or who. I don't understand what this means anyway, Mr. Kennedy. Thank you for your response. Let me hear from others. If you understand imbalance, you can let us know. Let me see if people are having difficulty in logging. Okay, nobody has commented so far. Uh, Mr. Lawrence is online. It's okay. Maybe he's with us, but I didn't see him here. Okay, imbalance. If you understand imbalance, you can let us know, please. Imbalance. If you have not heard about it, if you have not heard about it, just type no. If you have not heard about it, just type no. If you heard about it, type yes. I want to be sure you have heard about it. Okay, imbalance is when supply of a certain currency overweighs the other. Oh, that's good. Imbalance is the issue where buyers and sellers are not in agreement and the market will trend. Thank you so much, Mr. Muri. Imbalance is an area where one of the traders dominates, then the market makers go back to correct it. Thank you. I'm impressed. Thank you. Thank you. Thank you. So let me now show us imbalance from our chart. And because we make use of this balance before we take the trade here. Let me go and show us imbalance. Now, in markets, uh, there shouldn't be a gap. If there's a gap, okay, let me see what I'm doing. Okay, these are the trades I'm on. I show you before on Telegram group. But let's move ahead. This is JN for yesterday. Go. This one is for GN yesterday. I will show us, and then I have another one that I show us on the Telegram group. Okay, let me quickly check it so that we can move I go. This is another one. I show us this one. That was what I was using for can you see market is dropping. It will continue to drop and drop. But it is wise. This is just the another one that is developing. It's okay. So let's move back to what we are learning so that we show you imbalance from here. Let me show you imbalance from here. Good. Now look at this. Can you look up? Look this. Look down. This is red, red, sell, 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 then small buy, sell, buy, sell, then buy. Now let me first explain imbalance, then I will explain fair value gap. Okay. Imbalance. Look at this. Look at this point here. Uh, this point. Do you observe that there is a gap there? There is an imbalance there. All here at this point here, I'm talking about this candle. This candle. Look at this candle. I put a line on. Great. Look at that candle. That candle is the place I put lines. That is the place where sellers were not at all. See, from this edge to this edge, all this region, that is where we have all buyers. I mean, those people taking trade or buy. I mean, this region here. Okay, great. Can you see that region? Great. So that region is what we call imbalance. Can you see markets went up and came back to fill it? There should not be gap in the market. Now look at this place. There's no gap here. There's no gap here at all. This one touches this, it closes the gap. There's a small imbalance here that came to be filled up here. You see, there's no even gap here at all. If I mean by gap, the width of a candle should not touch the other if imbalance should exist. But if the gap is not there, you see now, can you see that this wick of this candle is touching this candle? This wick of this candle is touching this candle. So there is no space here. So there is no imbalance here. But there is an imbalance here. Can you see this place here? There is an imbalance here. There is a small imbalance here. For let me show us that one. For there is a small imbalance here. The last candle before the, okay, can you see where I drew? Okay, those who didn't join us can watch this video online later after the program, after the exercise. Can you see this place? Let me drag it a little bit. Great. Can you see there is an imbalance there? How do I mean there is an imbalance there? The week of this and the week of this, in between it, there are sellers. People are really selling here. So there is no how market will not come back to fill the imbalance. Can you see it came down and then fill the imbalance? It came down and fill the imbalance. It happens over and over and over again. Look at this place. Let me show you another imbalance. This is another imbalance here. From this place to this place, another imbalance. We use this imbalance to make decision on what to be done. But you can't just make decision without learning other technicalities thereby. Okay. I've been able to explain about 6 or 7 concepts today in a short time. Now, this is another imbalance. At this point here, there are sellers. There are sellers here. So there are no buyers at all. So a market cannot do without buying and selling. That is how life is. So market is still coming back to this place to feed this imbalance. Can you see the market went down, went up, went down, and came to feed the imbalance here? And it must be filled up. It must be filled up. There is no vacuum in price. Every space must be filled up. That is how price is, and that is what we call imbalance. Let me hear from you if you understand what I've explained so far with different examples. You can type yes. If you don't understand, let me know so that we can move forward. If you understand, you can type yes. If you don't, let me know so that we can move forward. It's a nice time meeting you guys, coming to my free smart money concepts to mentorship. So there are other things we have to learn to take trades before we can make profitable trades. So let me hear from you if you know that you need to learn, you have not understood imbalance, or you understood what I've explained. Let me just hear feedback from you before we go ahead. So I'm listening, I'm hearing. I want to feel what you want to type. We are waiting. We are waiting. If you have something to write on what I've explained, understood. Thank you, Mr. Kennedy. Thank you. Thank you. Thank you that you understood it. I know there are other people online that are not typing anything, but I'm so sure. Thank you, Mr. Joel. Thank you, God bless you. The other people who are online, you can comment and let's see your comment, and let's see if you are following us or not. You see, it's an interesting time. If you know these aspects of forex trading, you won't be afraid to take trades. And one good thing about this smart money concept is that you have lower risk and higher profits. If you lose 10 trades and you gain 2 trades, the profit of 2 trades will override 10 trades. I am not saying you are not going to lose at all, but your loss will be minimal. But you can't lose 10 trades in a row. It's not possible. It's not possible. If you know this concept very well, you cannot lose 10 trades in a whole. So okay. So other people are not commending. So let's now move on. I want to explain. The next thing I want to explain is, let me write it here. I want to explain here value gap. Let me make it bold. Bold. Okay. That is the next thing I want to explain. I make this one bold too. Great. Fair value gap. So there's a slight difference between fair value gap and imbalance. So let me use my chart again to explain it. I've explained imbalance. So let's go to uh, fair value gap. Okay, I need to delete some things before we get into that. Okay, I'm happy you guys came for the free mentorship. Okay, great. Now, what do I mean? Can you see? Buy, 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 buy. How many candles? 1, 2, 3, 4, 5, 5, 6. That means from this point, um, from this point to this point, can you see? Market went up. That is all confirmed. There is no candle at all that stop this move. No candle, just went up like that. Then look at this one again. That's all called fair value gap. Look at this one from here to this place. There is no buy that there is no buying candle that stop you. Although there is small buying between, but from this point to this point, it just went down. That's what we call fair value gap. Let me explain another one. From this place to this place, that is another fair value gap. For this place to this place, there's another fair value gap. From this place to this place, that is another fair value gap. Okay, that's what we call fair value gap. Um, let me use this to explain break in market structure, and then we call it today. Um, call it a day, and then we'll fix another time for the meeting. I will use a lower time frame to explain this because we take trades mostly from higher time frame. We take the directional bias from higher time frame and we enter through lower time frame. I prefer to enter through 15 or 5 minutes while taking the directional bias, what the market will do in a in higher time frame. Good. Now, I said I'm going to explain breaking market structure. Good, good, good. Okay. This doesn't work. Okay. Okay, great. This is where I need. Um, so you can get what want to explain now. Oh, okay, thank God. Now look at this. Market went up, went down, went down, went down to this place, went up, went down here. This one, that means we are in the downtrend. Okay, now it went down again. Now, can you see market was in a downtrend here, and suddenly, see this place. Wow, market remains in a downtrend until there is a break in market structure. So, can you see this is on a downtrend? So, we'll be selling here until there is a break here. There is a break here. Um, there is a break here. Can you see the break? Good. So the market, can you see? So it went up a little bit and kept going up until there is another break. So once there is a break in market structure, we call it break in market structure. Let me write it here. Call it BMS. I don't know whether you have seen me on my chart putting BMS there. Okay. Call it BMS. This is BMS, break in market structure. Okay. Oh. If there is no break in market structure, we won't say the market has changed direction. What do I mean by break in market structure? Let me explain it again. And look at this. Let me delete what I have here so that I will show you what I mean. See, this is higher. This is an old high. Can you see this old high? How do we know it's an old high? This candle is standing here. There are two more candles by the right and by the left. That is when you know there is a swing there. And at that swing, you say there is a resistance. There is a resistance there. Okay. Now look at this. This is another swing. This is another swing here. Two candles to the right and to the left. Then this is what we normally do, that there's a support here. That once market comes in, it will go up, but bank doesn't trade like that. They will clear all our stop losses here. I've explained this one. It says that there's a liquidity here. This is in the future. This says liquidity. Market makers will come and clear this liquidity, then they will go up. So again, look at this play. This is another swing. 1 2 1 2. There are two candles to the left and to the right. I think I want us to stop here. I've taught a lot today. Let me quickly summarize what we have learned today. We have learned okay, let me change it back to daily so that I can see this side. Okay, I want to see. I want to write. Okay, thank you. Let me highlight what we have learned today. We have learned number one. I want to change it to black for every one of us to see. We have learned number one. We have learned market structure. Learn market structure. 2, we have learned liquidity. 3, we have learned imbalance. We have learned fair value gap. So under market structure, market remains on uptrend until there is a break in market structure to the downside. Then if the market is in a downtrend, market remains there until there is a break in the structure to the upside. Then liquidity, I've told us where liquidity is hide. Liquidity is a point or a region where others are hiding, where market makers clear all your stop losses and then move against you, and clear your stop losses and move in the direction that you said market should go initially. So there is buy side liquidity, there is a sell side liquidity. Buy side liquidity is the region where people we want to place all their sales and then put their stop loss on a buy on top of it, on top of the resistance, and then market makers will come and clear it and then go in the opposite direction. The imbalance, I've explained imbalance, that they a place where there is a gap between buyer and sellers. Market cannot just stay without touching one another. So there shouldn't be gap in markets. So but when there is a gap there, then we have what we call imbalance. And then the last thing we learn fair value gap. When you have all about three, four candles blue, I mean green, or on a buy order at the same time, and then about 4 5 candles on a sell orders at the same time. So thank you so much. I'm so sure. I'm so sure we all understand what we have learned. This is just our free mentorship class. If you want to join our full mentorship class, it's a lifetime mentorship class. Today is Independence in Nigeria. That's why I feast this for free for everybody who cares to join us. And then for those who will want to register for mentorship class, you can send a telegram to me, and then you will be in our group. You will see how we take trades. We will mentor you for life until you also master this smart money concept. We place trades when before it happens, and then you will see when it happens, and then you make your profits accordingly. We don't use indicator at all. We just use the bank methods of trading, and before you know it, we are on their side. We don't use indicators at all. Indicator maybe to just check the spread in case you want to put our buy or sell limits. We don't run after the market. We allow market to come and meet us. We just place buy or sell limits as the case may be. Oh, thank you so much. You can reach me on the Telegram group if you want to join our mentorship group. We had you place tell you the techniques on how we can play trade. Don't lose your money learning this from people. I learned this concept from 4 different people. Each of them collects each of them charges about 200 USD for mentorship. So I learned from the first one, I wasn't satisfied. I learned from the second one, not satisfied. Till I learned from the last person. And then I brought all the knowledge together, synchronized it in my own way. And that makes it a very powerful strategy. So thank you so much. God bless you. For those who will join our mentorship class, there is a discount today, 50% discount if you can reach me today, and when we talk, I'll tell you the price for it. Is The mentorship class is 300 USD. If you want to join for between today and let me put it till Tuesday next week, at least we are still in the mood of celebration for independence. For Tuesday next week, you have a discount of 50%. From Tuesday, as from Wednesday, then it goes back to 300 USD. So 50%, that is 150 USD. So cheap to get yourself on a brighter future and get yourself out of this forex. I have a lot of bad experience on this, on using indicator. There was a time I used a particular custom indicator to trade from 100 USD to 2000 USD. If you care, I can send you the account. You see how it grows from 100 to 2000 USD. I was so confident that I have the system now, until one day, after so long a time, until one day the indicator gave me a wrong signal and can crash everything. So although it's hard to learn without indicators, mind you, but if you can learn, it's hard. I took it. It was difficult for me. I was so conditioned to indicators until I stopped it and then began to follow what people are doing. Those who learn from ICT, Michael is the chairman of ICT. You can check him on YouTube. The chairman of ICT is ICT means inner circle trader. So he was the one who introduced all these concepts to us, and that we are learning from. And there are different concepts online, different ways people use it online, but this is a smarter way of using it. You have a tiny stop loss and then bigger take profit. Thank you so much. I can't thank you enough for coming to our free mentorship class. God bless you. I wish to see all of us in our real paid mentorship class. There are a lot to what we have learned today. A lot. I just gave us introduction to what we are going to see in the mentorship class. You have videos, you have tutorials, you have live chats, and then you have discussion. You can share your chat. I confirm with what you are doing is correct or otherwise, and then you're at peace. It's a stress-free time. uh, Thank you so much. Thank you. God bless you. If you have any comments, I'll give you just 1 or 2 minutes to type your comments, and then we call it a day. So I'm waiting for your comments, guys. Thank you so. God bless you. Um, and by 9:04, we're going to end this 9:02. By 9:04, we should end this live broadcast. So I'm waiting for those of us who want to write anything at all. I'm waiting. If you have something to ask, anything to say, no problem. So we just have a minute more if you have anything to write. Okay, thank you guys for your time. See you in our paid mentorship class. God bless.